Welcome, it's the Crypto Sniper, the Crypto Sniper. I've just realized someone has claimed a W against me, and I'm going to give it 100% to him. Benjamin Cohen was concerned and bearish and gave his reasons for being concerned and bearish on crypto markets last time as a moving average related thing. We don't agree on moving averages, but the market has gone down and he is correct and accurate. So it's the first time actually that I've had someone that I've taken on that I know that has come on back to gloat, and he can have the W. He won on that accord. The market is down and the market doesn't lie. Bravo. Let's show you that, in fact, and eat our humble pie. It is indeed a humble pie eat, and let's eat it publicly, so all may say that we be gracious on this version of events. So we're the Crypto Sniper. We're doing a live stream. I've just seen this, by the way. I was coming on to warn that the crypto is actually looking soft, and I'd actually forgotten that I'd mentioned him and that he was saying that before us, and that he's been proven right. So let's give him his plaudits, and let's take our L on calling differently. I want to show, in fact, let's show it. This is all, funny enough, I was going live. I don't check Crypto Sniper often. Most of the time I've been in Market Sniper, we've been trading the gold. And there I suddenly saw that someone popped past to say hi. And I need to go find that for you now. We're going to talk to you why, technically, and I believe our reasons are nothing to do with moving averages. And in actual fact, they will deal with candlestick analysis, the most orderly and sound way of dealing with the market. So let's go ahead and do exactly that. So I'm going to find those tweets, by the way. I might need a bit of time, and we'll come back. In fact, let's just see. It was one of these. Where's the one I want? Yeah, I need to not share screen. And we're not sharing screen, which is good. There it is. That's the one I want. Here we go. Over there. Of course, a lot of his fans are through to come and have a good gloat, and well, they should. So let's go and deal with being wrong on the crypto markets about its outlook. Let's share screen and do so that you can all see and deal with one thing at a time, and then tell you why our reasons are and what possibly comes next and who's going to be the winner when it finally turns. So let's do exactly that. There we go. Finally found what I wanted to show you. Tunneling. There we go. Here, 22 hours ago, we disagreed with Ben some time ago. These posts are typical of moving average analysts. Moving averages lag, and we stand on that, and we'll continue to say that. I want to actually see if I can see the original post. Eventually, of course, in a bear market, a very lengthy consolidation, MAs do catch up with price. It's called mathematics. He popped past to say hi, and I think that's a claim of victory, which we will give lots of his friends saying hi to. And so we were wrong. Congratulations to him. What is happening? Let's go and deal with that now that we've dealt with the various egos, mine, his, everybody else's, on talking about the market. Let's go have a look at the charts and see what it is. I hadn't remembered that, and as I was going live, I stumbled on all of that. So let's be gracious. Okay, this is what's the circle on Bitcoin, and I'm taking you up to the monthly accounts. As the month has progressed, it's decayed. And we already were in an environment where there'd been a little bit of pushback on the upsides, and that is indeed true. But September was potentially looking a little different, and the BTC dominance case was turning. And typically when BTC dominance turns, what you actually get is you get the alt run. That's the most usual version of events. We highlighted why Bitcoin dominance was having a bit of a churn at this point, and we'll go back and have a look at that also to follow. The wick selling at these levels, of 125 and 120, was a feature of the previous 2 months, but this one. So we are now in September. August before it was down, and July was a sell-off, showing that while you were trading up, you were getting a sell-off. This is turning into a potential tombstone doji. This is the way to analyze the charts. I still will stand by our methodology on that. This is the way to manage charting, not with moving averages, but with candlestick analysis, patterns, and volume. These are leading indicators. People will make mistakes, albeit a W for Ben today on his moving averages. They'll come to the wrong conclusions in due course. So I'll give him the battle. I won't give him the war in terms of methodology and process. That said, the sell-off in the latter part of this month, which we are now getting into, there's only going to be a few more days left of this month for locking in. You could end up with a tombstone doji, a version of a shooting star, which will imply likely sell-offs. The tactical traders would trade in the following way. This is your monthly chart. The tactical traders would put a stop on the top there. This is not how retail crypto trades. So let me just talk about candlesticks in terms of the good old commodity guys that used to hand draw their point and figure charts and have, normal charts back in the days and coming through. Tactical trading off candlestick analysis is you would take a short on the takeout of the previous low, which you haven't quite done. Let's put this in a microscope. It's a bit small up top there. So let's expand the monthly. You see these things on the bigger time chart, often a lot easier. So let me just zoom. We're just getting the 3 months of Bitcoin in its largest format right now. I want you to see these 3 candles. So you did trade slightly lower here, 107.27. Here you're 107.389. The tactical candlestick trader could put a stop at the end of that. And if this comes down, you're currently there. If it comes back down, you might get the doji. The following month, in the first week, you might trade through the low. You would be triggered short. Now, that's quite a long old stop loss, you'll probably appreciate. You'll see it at around these levels at 107.4. And the distance to 118 is about $11,000. That's a big old stop to take. You could, on lower time frames, optimize that and find yourself a clear technical point somewhere lower in this rejection wick that could see you have a better trade to the downside on the short side. By the way, in terms of this, he had mentioned the market was going to go down, and our suggestion was that you would bounce at the 108, and the 108 was a bounce, and that you would drift back into range. So the short and medium term of our call was largely correct to this point over here. You were supported at the 108. What has changed subsequently that's brought his view back in is the sudden weakness and the spill down to the channel. Now, looking at that monthly chart, and also looking at the downside momentum, this is kind of a grind up. That's a hard sell to the downside, and you've broadened on it. So you're coming back down to this very key 108 level. Why was it key? We told you before. So our short-term view of drift back into range was accurate, but subsequently, as time has progressed, weaknesses come back into the market. So remember, technical views on short time frames like this versus the ones on monthly, they have a certain shelf life, and then new information comes in. The new information is the key softness across here since that, and you can see that that support is now going to come under some serious duress, let me say, in the next few days and maybe weeks. That 108 became critical because of that double top. It was resistance before, and it ran through the flag and was the floor for that tiny fractal that saw us go long. That trimmed the top of the flag over there and gave us a flagpole that had us bias bull. However, this broadening structure that has since started to form over here with the marginally higher high has meant that there is a little bit of selling going on out there. Don't forget those legacy wallets seem to have been unloading quite a bit. Good old Michael Saylor on the Ponzi scheme. I'm not so sure all things are that rosy over there either. and you may be in for a bit of a recess here on Bitcoin's overall bull case hypothesis. We'll see if the 108 fails, but I would suggest, given the momentum that it's showing at the moment, is that it probably will. It probably will. So then the question becomes, how far does it go? Well, interestingly enough, the flag interacted with the 100K, the key logical number, which is often very relevant for pegging and options and derivatives. And remember, we've invited the Ursary Pharisees of money lenders, such as BlackRock and all the rest of them, to come and pull their tricks, and round numbers on derivatives are a thing. So it would be a great concern if you were to subsequently, after a minor rally, let's say that's not too convincing, come down here and break in that kind of a flag and run down to the 100K. Why would that become a concern for Bitcoin fans? Well, it would become a concern for the following reasons. You would have a potential larger reversal pattern, such as this. And by the way, Bitcoin is high risk and in some ways very similar to NASDAQ tech type commonality. This and previously, it was almost a de-risking from technology. It's often seen as a token technology proxy. And if it is seen as that, it could actually be an early warning indicator, because money starts to withdraw from the most riskier spaces for a potential NASDAQ sell-off. And that would just further accelerate the de-risking on the crypto side. So if we were to get down here and meet the 100, we would have a risk. Sorry, that's not the shoulder I meant to draw. This is the potential shoulder I meant to draw over here. Let's go back and do it again. Grab the blue line. That would be it over here down to here, if that happened. So there you go. That would be the end of a head potentially. So you would have a bit of a shoulder. You would have a big head to this point. I've actually misdrawn this horribly. Let me fix it. Draw accurately, sir. Okay, sorry about that. Let's draw that again. We're talking about a possible weak rally and a sell down to the 100. In the event of that happening, you would technically breach the 100 and have some form of rally. I suggest the 108 is a bit of resistance. So speculating, there's a bit to happen for us to get here, but this would certainly put the discomfort into the Bitcoin maximalists. In terms of this, you would then have a neckline on one of the most significant round numbers in existence for Bitcoin. So you've got to look at this and say, it doesn't spell upside continuation pattern right now. It would have quite a bit to do to change that. How do we fix that? Well, how could you fix that Bitcoin reverts bull without doing something like this head and shoulder option? You kind of need this to turn into a bit of a flag. You kind of maybe need it to meet the bottom side and come back up. And then you need it to maybe squaring up. That's getting messy again. You need it to start doing something that sees it hold a level a bit more and do something like this. There's an unhealthy downward lower lows and lower highs cycle going on right now. And that's not good. So if the 108 breaks, you will again be in lower low territory. You'd need to come out of this bear channel that's probably maybe early doors beginning to form. So whilst the 108 held the first time, it's being challenged again. And given the momentum to the downside, I think it will probably give up to the down to some degree. And that's going to be bearish. So let's talk about the Bitcoin dominance, because we highlighted that the Bitcoin dominance was at a critical point, levels that we'd shown and determined before. You see these two key levels that's seeing it bounce and rally after quite a strong reversal out of the channel. Let's take you up to a bigger time frame. So generally, the Bitcoin dominance when things are selling off is not a good sign for the alts, particularly being the higher B token. As we pointed out, we called this breakout out of the Bitcoin dominance stall box era that was down here. And Bitcoin was the main winner in this market, this rather anemic bull market so far. It trended and channeled up pretty well. It did give one fake reversal that caught us. We were wrong there. And this is a far larger one. I do feel that it's changed and turned. And this probably is representative of the channel that has been broken. However, it's rallying here right now at this 57.63. See those two levels? They come from the downside structure there when we were in an alt market bull that saw Bitcoin shed a great deal of dominance. It was the first setup in a new trend. It set up both a target. We'd also highlighted that this 58% had shown itself as a key level before, right the way from across here, where you had this falling wedge between the two ranges. So the 58 is a significant percentage. You can see it, you're embraced there. You can see there was support there, it was support there. You can see the base there, falling wedge. This was obviously in a period where Bitcoin was again dominating to the upside. So we're interacting now with these key levels, and that's why you're getting a little bit of a rally. Now, that's not a major victory to be called on Bitcoin dominance so far, but it might see some form of ongoing movement. Typically, if we're having a soft period, Bitcoin loses a smaller percentage. So you would expect it to go up a degree. Is this a massive reversal that I would say, Bitcoin's going to make a new high on dominance? No, I don't see that. Had you said it here, though, you would have been wrong, because it did make a new high afterwards. But I felt there was a false breakout on a firing gun on the alt market that hadn't transpired. I think this degree of sell-off is to a larger, more likely to be the end of this channel that we had drawn. Let's draw that channel again on the log. Are we in log scale? Let's just double check. Regular scale, it holds up a bit better. That's why it's there. Generally, over longer periods, I tend to utilize a log scale, but I show you the linear version and the bigger version. The interesting part of the linear version is you were kind of in the top floor for most of this, but for that test over there where you swung down to kiss the bottom once. This shows that you weren't able to get a bid. So Bitcoin dominance, in my view, I'm standing on that view that we probably turned, but you'll likely see a rally return move. I don't think you go all the way past the new high. How do we be wrong on that as well, given that we've been wrong on the market in terms of Bitcoin holding up, or I would say so far? How do we be wrong on that this would actually run that high? What would you need? If we were to have an absolutely debilitating NASDAQ collapse of tech and a chronic de-risking and crypto being hung out to dry and a lot of liquidity moving out and a lot of wrecked holders panic selling, you would probably, if it's on a big enough scale, you could get that move to the top. So having said, crypto is often the beginning and the early warning alarm when people start de-risking on tech, and it's been shown to be that way before. They will turn, often the crypto markets will turn before the NASDAQ markets turn. That is a possibility, and it is a possibility. It would need to be a big contagion, and it'd need to be a big crash. You could then get a surge for Bitcoin to a higher level. So that's a little bit on why I see that the crypto markets, we were wrong, and that it's softening. It's a softening environment. And that monthly chart on Bitcoin confirms that. So let's just go back to that. I want to show you the other tokens on the monthly charts. As this month has worn on, it's become more confirmatory that they're soft. So if we have a look at Ethereum, for example, on the monthly, in fact, let's go bi-weekly. It's slightly different. We want to go back to log scale because we're looking on a big time frame. Let's just hide all our levels. It's already begun. So not as clear. Not as clear. I just want to choose a different. That was Bitstamp. Let's go Coinbase. What you'll see is that you had an indecision doji there, a very small in-betweener candle which is confirming the indecision generally. And then subsequently a candle that's pushed down. Now, again, it's done more to the downside than Bitcoin in terms of percentage, which is why that dominance has started to inch upwards. Is it a chronic sell? No. But could it become more chronic? Again, refer the NASDAQ comments, and we might even take a drive by the IXIC just to have a little look for everybody to see where it stands. If that continues grinding up for a lot longer, things calm down, you may be okay. We've also, however, pointed out that there's something going on with the dollar, and we think you've met a key dollar reversal moment. And I want to show you that chart. And for that, I want to turn the light back on. And this is worth watching, because remember, in crypto, it's also about what the dollar does. What is the dollar doing? This is a channel that the Dixie's been in for an extended period on the upside. That's a channel on the upside that's been for an extended period. The upside HVF that we saw and called was over here. And there's a couple of reasons why I want to put that draw on. We called for the dollar to have a very bullish period way back after the COVID lows. That was 2020. It got slaughtered. America printed for the world, basically, and the dollar got hammered. These orange squares are all key moments in the dollar index's history. There across the top, there along the bottom. Then at the 100, we identify the key level. It's a bit like 100,000 Bitcoin in a sense. It's going to be critical. The big shooting star, a lot of volatility, big shooting star, turned out bearish for the Dixie. Down it went. Then we pointed out this inverted head and shoulder. It had a nice complex head like that. And then a right shoulder. We highlighted this was a breakout first of the inverted head and shoulder. That meant you should be long. And then we drew the upside HVF. You'll see that funnel there in green and the stop in red. That's your pattern, and it provided that target, which of course interacted with the top of the channel. At that point, a lot of people were calling 120, 140 on the Dixie even further. You had gone up very strongly, and it was a very powerful dollar-strong narrative. You'll note after that target made, it actually fell incredibly hard and found a support on the 100. It supported again on the 100 before giving up the 100 to kiss the bottom here. And we've marked in orange the current week or fortnight. We're on a 2-weeker now at the moment, just to flesh it out and get a bit more of the detail on. We're calling this a key pivot on the dollar. So since we've addressed this view and the fact that you've come to a key support level of the legacy funnel by our standing, that represents a massive support of the dollar, and it coincided with this channel that we've been showing you here, where you had a number of key days. So you had a horizontal and an angled line that intersected and led to a hammer forming on the dollar index. That means you could suspect a slightly firmer dollar for a while. That also, given that it's actually been a weak environment and Bitcoin still wasn't that strong, it's not looking like it's going to be very strong now that the dollar starts inching up. Again, I don't expect the dollar to smash it up like it smashed it down. I don't expect it to just moon like that. It could. That would have to be a fear type environment. This is what happened. You had the smash up for CV19. Then they announced the QE and it got smashed all the way back down. But you would need some form of fear, demand destroying event, something to get on a big way. Again, high risk of possibly happening, but I would bias to the camp that you're going to work your way back into the range a little bit in a moderate way, not particularly zealously, but decently so. So the bias is now a little bit more of the dollar strength. That doesn't mean it's going to put a stop to platinum going a tiny bit higher, silver going a tiny bit higher, but we've given you levels where we expect those things to rest, and gold made a major target. So the combination of gold making its HVF target, the dollar coming to a funnel support and bottom of channel range, and then doing a hammer, which is candlestick analysis, in other words, testing into it, being rejected, all point to slightly firmer dollar environment, not supportive for crypto. So this is new evidence that has transpired as the course of this month, and we're pivoting our view, and we are later to that opinion than Ben, who was before us. So congratulations to him. So that's it. That's the dollar index. So let's talk about some of the other alts on a similar time frame. Here's one I want to just show you on XRP, for example. And again, we'll go with Bitstamp for some nice lengthy history, but I want to show you on a monthly basis what you have. And I'm going to zoom in a little bit, and we're going to take all the draws out. What you're actually getting for traders is a short opportunity. People don't like that. Oh, you're not allowed to short my token, make it become less valuable. I'm afraid it's getting less valuable on account of its own. That is a shooting star, friends, and we're close to finishing the month, and actually yesterday and the day before. So I gave this update to the community twice, once without volume because I'm a clunkhead, and then the second time correctly. And the key part of all of this is there's selling here. There's a range of selling that hasn't been beaten. There's a range of selling that hasn't been beaten, and it is winning out. Let's get my draw tool back. It's gone onto the other screen. There we go. Here it comes. So in this up move that we had, again, near on 50% sell-off. That was July. Okay. We then had an off month in the previous month, August. And actually, that was finishing as a shooting star. And in the end of the final weeks, the body of the candle got longer. Now you've had another attempt to trade up as XRP during the month, and you've had an intra-month reversal, and you've come back down. And you effectively have a doji star. It's almost a doji. It's actually slightly red. So it's already past the open of the month, the trade up. That's another key rejection. And I've already explained how tactical traders might short that on a monthly time frame. Again, it's quite a big stop. The range is quite large on that. That's not a trade recommendation. I don't make any recommendations. We're not regulated to do so. We share our opinions on what the market will do next. By the way, thanks for your chat. It's interesting to see you. We will talk about XLM. It's still to come. So this is a shooting star, and that's bearish. So my take on XRP is that too will be trading down to the downside. You had a degree of body support, low volatility at roughly these levels. You've got to remember that you did trade through 2, but you had a lot of support buying at 2. These lower wicks, that's a hammer on its own in full. You then had a shooting star, and you had another hammer. In each of these instances, the key level being run was 2. So there are buyers sub 2 on XRP in those weaker moments. But if you were to have the big one and a major correction in the NASDAQ to boot with it, we are talking that there's recessional vibes in the US economy, etc., etc. You could dip a lot lower than that if it became chronic. And that would be undesirable for most of you. And I wanted to share my opinion that we had largely got into defensive tether a couple of days ago, and actually since we did and we observed all of this, both the dollar and everything else, we've continued to see a decay in this final week of the month. So it's looking like month ends are tough for crypto. Month ends are tough for crypto. Don't forget, derivatives of expiries in the last day often where those are in existence. Okay, so that's XRP. Let's show you what's happening on other big market tokens and why they look a bit soft. And actually just another currency confirmation, because we gave you there's a little bit more coming. There's a little bit more strength coming back into the dollar. I want to show you a classic shooting star on the Euro USD as well. Again, on the monthly time frame. We're doing a lot of the bigger time frame calls now. You had 4 big months for the euro against the dollar there. You had a little dip back, and it was bought all the way back up there on the 4th month. Then you had the 5th month. Then the volatility started. You had your first real red month that kind of took back 2/3 of the previous good. Then you were bouncing back up. and now you're having a shooting star. Again, tactically, you're not running that on balance of probabilities, and you trade the short through the low. I would get in sooner in the final week, and I would have stops tighter if I'm a FX trader and wanting to put this trade on. I already have mild dollar bias FX trades, which are doing just dandy, and those are on the USD JPY and the Korean won. Okay, so that's the fiat world, which is the other half, remember, that many people forget to analyze in terms of the crypto. So the macro candlesticks are pointing to dollar getting a bit more of a bid and probably showing more strength. That, again, doesn't mean it just zips straight down here as fast as it went up. It could in a major crisis, but it doesn't mean that. I would probably say my biggest bias, we don't have enough information to put a strong view, is that it's going to drift down, the Euro USD. So this is the same as looking at the Dixie. Almost 52% of the Dixie is the Euro, but it also has the yen, the Swiss franc, the Swedish krona, and a little bit of pound in it. Okay, so let's go to something else and just talk about Lumen, for example. And we will do Coinbase Lumen, and you will see how it's literally the last three candles are a doppelganger for XRP. This is consistency. You had a very strong surge, but you lost 35% of that in the July month. You had a down, you attempted to rally and then closed on the lows by month end. Remember, monthly chart, Lumen monthly chart. That's what we're looking at here. You closed on the lows. You then tried again, each time making a lower high and a lower close. Each time making a lower high and a lower close. So whilst we're still on the monthly time frames, you are doing Dow theory, lower highs, lower lows, and I'm disappearing off your picture. And that is a shooting star like that. Stop there. You could short at any point, or you could wait for the takeout. You could drop into weeks and days and choose a potential as a XLM short-term trader, biased to the short side, for now. However, these are the status tokens, and we do see massive things coming for them post this event. We don't know how big the fall will be. We don't have a technical pattern. We don't have an inverted HVF yet. We can drop down through the time frames. You can see it's choppy, but it is trending down. It's not violently down, but it is trending. There's those lower lows, lower highs. If I drop it to the daily side, you'll see them more apparently. We were potentially expecting a little bit of falling wedge support, and that hasn't fully gone away. It hasn't fully gone away, but you know, if we got to see it in XRP, we got to see it in XLM. We talk about the 3 impulse here. You could trade lower. Something that could be bullish is if you trade here and you cross here, fractalize, and then break to the upside. That could be a scenario of, hey, we did trade lower, but we only traded a tiny bit lower, a marginally lower low, and 3 marginally lower lows in a row, and you start moving up and you break out of the falling wedge. So that would be a quick resolution to our problem. But don't forget, we're seeing Bitcoin still easing down. He's kind of the king at the moment. You would need a bit of separation from that. Do we have a falling wedge on XRP and the others? Potentially, but you could also have type 3, which is where you spill, return move, and you do have a major flush out before you find support. You can't rule that out, that option out. We teach you about that and the environment that it's in. I'm going to come back to the bull case, but I want to study the falling wedge possibility, which might be something that has this problem pass away a lot sooner. That's XRP, and you can see the similarity, which was why we had our initial bull bias. Falling wedge, you're going to break out. And in fact, an earlier draw had us thinking you might have already broken out. I'd probably say that's the correct draw for now. There's your splitter. You could just be very close to basing. But then it comes back to what Bitcoin is going to do. Let's look at Bitcoin on the same time frame, the daily time frame, and see, is it really that bad? And in some senses, on the top, the monthly, I did feel it is a little bit off. It's going to need to support at the 108. It isn't in a falling wedge. It is very much like that. But let's look at another characterization for it. Could it be a broadening structure such as this? Could it sell off to here and then rally? Who knows? But at the moment, monthly Bitcoin looks soft. Monthly Bitcoin does look soft. Bit of a rising wedge that you broke out of at the top, marginally higher high. We do warn that marginally higher highs lead to problems. That's why you had that sell-off. We expected the support in the back in the range, but that's ugly. It's an ugly sell-off. And I think that 108 is at risk. Okay, so yeah, unfortunately, Bitcoin is the king. It's the top dog of the fiat crypto realm. And I would actually say we've got to see what it does. We've got alerts here at our 108 to see. What would be interesting if this suddenly turned? If this suddenly turned and found a base, how does Ben end up being wrong and our original hypothesis turn out correct, if possible? Would be something like that. This steep momentum, which is a concern, turns and has an equally steep rebuttal move back to here. And then you end up with some form of W bottom. You might even get a little shoulder with it, like you actually got here. So you could get something like that. That would set up an upside target, and you would continue your move towards our targets of 145 or 50. Right now, odds are against us, I would say, of that happening, but not impossible. If they do happen, you can be sure we'll be back to remind everybody that we pulled one out of the fire at the death. That's where it is on Bitcoin. Back to the XLM and the macro, the bigger time frame with when whatever is going down is done. How does it look? How does it look with that? Let's maybe put a T on there and see if we get enough history on Binance. So back to our draws. Let's see if we've got any on this one. No, then maybe we should go back to just USD and Bitfinex or Coinbase. There we go. Let's do it. So the big picture on XLM that really makes us excited is the following. Like XRP, it had a sort of, this was more descending triangle. XRP had more of an upside HVF, as we call him, during this period, and then enjoyed a massive run. It's higher beta. Had a beautiful inverted HVF there, by the way, that performed to target to the downside during the bear market cycle. It then had this nestled multitude of head and shoulders with different necklines, all of which made target to the upside for the 21 bull market. So it's been pretty communicative to us technically as a pattern. And then it had this lengthy period that was very frustrating for everybody basing out here. And here's the good news when whatever's coming is over. And I don't think it will be forever, but it might be brutal. Here's the good news. And I want to drop in some good news. This token, in our view, no matter what Bitcoin maximalists will say, will be outperforming Bitcoin when that moment comes. And that is our house view, as with XRP. But this one, in some senses, might do so to a higher degree. It'll have a higher. Here's the big draw for you that we want to show you. I'm going to just switch most of the other things off. There you go. So we just get a cleaner image. So we've given a target on XRP, and today we're going to reveal our XLM macro target. 14.939. That means $15 to be run as and when that big moment for alts comes. It doesn't necessarily mean it'll all happen in the one cycle, but I think it probably would. So don't blame us if you top out at $4.76, you run the 5, then we go for another period. I don't think we're on a 4-year cycle anymore. We're on a liquidity macro world type vibe, which has got very little to do with the Bitcoin halving cycle. I think we are ever, with each period, we are further unhinging from that association, and it's becoming less and less significant. So a 14.93, as you will respect, is a great target. And this is also looking like a winding up possibility inside our funnel. So with further downside possible short term, the end result could be a very attractive entry with a super type stop and one of the most epic runs you could possibly ever have. That could see you buying in the upper 20s, the low 30 cents, and holding till $15. $15. Okay, that's a big announcement, and it's actually a big bullish take in a time where we're actually anticipating a bit of slippage out of crypto. I want to have a look at what some of you guys have said. Yeah, so do you like the target on XRP? Rochelle, my girl, is helping me. She's telling you to smash that like button for coming and giving you an update, even though it's not great news for the short term. Greetings from Venezuela, Francis. Thank you, Ediel. So can we do Solana, says somebody. Greetings from East Coast Australia. XLM's ETF soon could be a nice driver. Yeah, so this particular percentage run that we've just described, if it bottomed right now and you can't get it any cheaper, unlikely, as I say, we've got a little bit of a drift off on. I think it can be purchased cheaper, but let's throw some risk rewards potentials on this. Just watch it. It's not as liquid as XRP. So I'm going to just squeeze this up a little bit, get our chart, get us some working space here. Clean our chart up there and turn the eye off again. Yeah, for a minute I put a risk reward, it's going to put all the other lines on. But let's say you bought, I think you could get away possibly with a stop there. And you could be looking at something that's 140 Rs for every dollar you risk. Now, you don't go to $15 from 30 something cents or upper 20 cents in, even in a major alt run in a day, a week, or an hour. So bear in mind, you're going to have to be patient, and it will get choppy, and there'll be a rest point, both at the first interim, which is around about here. It's around about $1.32. The second interim, which is approaching $5, and then target 3 times higher. Just to tell you, it's a bit deceiving when you look at a big time frame chart on log scale. Just to tell you how big a call that is. We're saying something you can buy at 35 cents that's quite likely to first get a bit cheaper is going to end up running through $15. Let's just put that on a regular chart so that you can see exactly what's being said. And I'm going to pull that regular chart down, down, down. And that is how crushed it gets to be compared to that target. And we haven't even got to the $5 mark yet. So that's quite some move. That's quite some money coming into here. That'll probably be based on the CBDC. Look at this, look at this, look at this. I mean, it is ridiculous. It is a ridiculous call, 30 cents to $15. So you'd have 5 times, that's $1.50, and 10 times on that. That's a 50x call that you've just had. And that's how the chart looks without turning it into a log scale or mathematical. And I will hit the light for you to enjoy that draw. That's how far away that move is. So that's some bull call. Would you like to make 50x? I think it'll happen. I think it'll come. And I think it's on balance of probabilities, a decent shout for the reward it's paying relative to a potentially very tight risk, which means you might even enter 3 or 4 times with just 1 unit, and you might lose those first 3 entries. You still have to take the 4th and the 5th, but one of them delivers you all those other R's, which will be around 140 of them if you execute correctly. So that's a log scale versus a regular scale. That's how it looks. That is a big call and a big move. And ideally, it won't be tomorrow. Ideally, actually, we would like this on the small time frame See these strong moves? We would like it to come down to wherever it's going to come down to, and do that. And then start getting a nice little fractal of a reversal in there, something in there like an inverted head and shoulder on an, don't forget we're on the weekly here, that could be on a 2-hour or a 3-hour. That gets you in early and then lets you see your way all the way up. So that's how we'd look to execute on this. And I don't think you're forever away. It could be in 2026 sometime. That finishes. If it does all of these things, let's say it comes all the way down first, then has another bump surge, and then has to ease a little bit down again, drawn to scale, that's already somewhere in the first half of 26 and you haven't broken yet. So bear in mind, you need to be patient. We're talking big time frame setups. Remember the XRP one? Everyone like, when's it going to go? When's it going to go? And you worked 6 months with that RL2. It was during this period here, it was literally a go there. We had one small go on it, on XRP, and then it went all the way back down and walked again. But look at that little squeeze there. At that point, you were 8 cents, 9 cents, and you ran to 63 cents, 7x, and you still haven't broken the pattern. This is just movements inside the pattern. You haven't triggered for the big journey yet. Okay, so pretty cool, pretty good, but not that there. And there's some easing first to come. Okay, let's have a look at some of your comments. Don't forget to like button and share and support the channel. We appreciate it. You can also book a call to become part of our community where we will be maximizing the crypto bull markets. And let's see. Rochelle Fernandez, thank you. Let's have a look at the last comments. I will join if XLM 50Xs. You'll buy me a bloody Ferrari if XLM Xs. 50Xs. You'll send it to me in the post. Amazon.com. Deliver Ferrari at your door. Thank you so much for making me rich, Market Sniper. What are your favorite colors for the interior? Yes, not transgender pink. I'm curious how you see your wedge now. Can we do Solana? Okay, I'll take a look at Solana because it's in the top 10. Sol, USD. That's had quite a nasty little weekly downside as well. So again, let's start from macro to micro. So let's have a look at the monthly. Let's pull it through. Now, the bad news on Sol is that's an ugly as all hell candle. It's actually one of the uglier. It's a pig ugly candle. I have to look at this, guys, and tell you that that's trading lower on balance of probabilities. That's trading lower, and it could trade a fair bit lower. The best way you fix that is you break, you open, you trade a long way down, and you get a violent rejection up. That will give me optimism again for your token, not this month, but the next month. Right now, that's a reversal, and it's an ugly reversal. It's an ugly reversal, and you'll trade lower, I would guess. Now, that's not to scale. Don't take numbers from that little diagram. This is, me doing my Picasso draws just for illustration and ideas, but that's an ugly candle. And I mean, I can show you other examples. This is a less ugly shooting star on Sol. And you did that. Okay. So that's an ugly shooting star. That's one ugly shooting star on the monthly. It trades lower for me on balance of probabilities. If you ask me, I'd be in tether and I'd consider even a technical short for it. If I could get targets on smaller time frames with other patterns, pinch that. I'm not putting a stop up there, not for all the tea in China. That's a heck of a way away. What you're going to trade? Tuppence. You don't want to, you can't allow, the range of this month is vast for Sol, by the way. So high, 253. Low, 190. You've got a $62 range in a single month on a token that's valued at 194. 194. That's literally almost a third of its total price is your monthly range. It's like, what? That's a volatile shooting star that usually can be expected to be followed through to the downside. Sorry about that. It's not good news, but it is the news. It is the news. And whenever I stray from the monthly charts and stop looking at the candlestick analysis, you know, I suffer from less foresight. This is the way you should start. Macro time frames. Look at this grind line along here. You've been grinding up. This has been a rising wedge grind. That was a previous grind in a channel, but without a squeeze. Bad sell-off when you broke here. That's not good. It's just not good. So sorry, Sol goes down. There's probably, guys, we can run the rack, and I haven't got the time to do every one of your favorite tokens. But my guess to you right here, right now, is you're going to see this shown across the board. By the way, Binance made our target. It made a key target. I'm guessing it's also traded down. Let's just show you that. Wait, we don't want an 8 in there. I was wondering, where's Binance? Now, if you go back up to a monthly, it ran its 1,000. It was a massive upside target that we gave. Look at that wick being sold down. Now you've got 5 more days, have we? It's Friday, 27, 28 over the weekend, Monday, 29, 30, 31. So you probably got 4 or 5 more days. That's turning into an ugly reversal as well on BNB, which has been one of the better token performers. It's a nasty rejection. And as I say, could foreshadow NASDAQ weakness. World Finance Liberty token. I will do that one for the fun of it. I don't know where I get a chart for that. World Finance. That's your monthly chart. It's one ugly candle. That's one ugly candle. There's not too much that can be said about this. Bad sell-off, bit of a hammer bottom now, drifting up. But that's a bad sell-off. You'll have to see if it returns all the way up. But I doubt it's going to defy the alt mood, which will be dictated by Bitcoin. One of the other things we should do and can do is look at tether dominance. Go back up to the monthly. 4% is growing. 4% is a hard floor. I think we've done this before. Let's draw. Yep, we showed a double bottom here, and we've shown the 4% as a key level. Let's make it a bit fatter. So we did quite a bit of work when we were pointing out that we were going to revert to a bull market here with the tether down. It's a very busy chart. Let's go to the weekly and get a bit more detail. We showed the bottoming reversal here. It's very overdrawn. These targets were all made. Then tether came back down and that was a good time for the alts. What's actually happening now is you hit that 4%, and actually we're getting a bit of a gain in tether, which means defense generally. It means defense generally. It means defense generally. Let's have a look at it without all my scribbles. That 4% has been a very hard floor. For this alt run to get really running, we need to see that break down a little bit. You need to see the amount of money being held in tether actually going down. And at the moment, you probably had, on a small time frame, we're on a weekly, you've probably had some form of a inverted head and shoulder here, and you're trading up, which is just another reason you'd have a target there or thereabouts through 4.9. Accumulation of tether points to reversal in the crypto. So that's it. There was a channel down and you've broken out of it. Another way of looking at the fact that people are getting defensive. Another way of looking at people getting defensive. Yeah. The Trumpenstein family, yes, we know about the World Liberty Finance. Yeah, good, excellent. Okay, so that's where we're at, guys. Soft, unfortunately, for crypto. Downside for most alts for a short, well, who knows if it's short, for a period. We'll be watching how it progresses to the downside. We'll be looking for reversals, but you need the tether dominance to start coming back down. And actually, it's got targets to the upside to make, which says it gets worse first. That means folks are going to be taking cover. We set our alerts over there. And if that's happening, generally Bitcoin rallies. But I do feel it's had a major reversal. Dominance has. But you're going to have a return move against that initial break. If it gets worse, maybe it was a big false fake out. Then we'll come back and say the dominance hasn't turned. We'll have to see what happens with the recession. I fear the consumer in the US is the average consumer, not the high net worth, but the average consumer is pretty wrecked generally at the moment. Okay, let's have a look at any final questions from you all. Any final questions? You're welcome to join with the free course, by the way. The link is being shared as I speak. What will you get? You'll get a video a week talking about the technical analysis that we typically do. That'll give you a crib sheet, basics and bases that can be covered utilizing some of the core concepts. We don't, like Ben or anyone else, use moving averages. We don't conclude anything from lagging indicators based off math formula with nothing but the input of price chucked in it. There's nothing predictive about doing math sums and different versions of them. The last time I left Metastock, I think they had 3,000 indicators, which is 3,000 ways of saying the same thing after it's happened, because they're just different math formulas applied to indicators. And people often get excited. Computer generated line must be right. No, it lags. It's dependent on what price data you're giving it and how much you're amplifying the most recent data or averaging out to a longer jurisdiction. So we stand on that. Patterns lead, volumes lead, and those are your great gifts. Volatility constrictions put you on notice of potentially impulsive moves. And that is where the best part of technical analysis lives and resides. And we'll keep steering people to understand that and moving away from exponential moving averages, simple moving averages, weighted moving averages, which, as I like to joke, is Farmer Brown pulling out the dead corpse of a cow out of his river on a tow rope and dragging through the mud to pull this dead animal out, and then occasionally looking in his rear mirror and out the back and saying, I wonder which way I must turn. The cow must tell me. It's not going to happen. It's not going to happen. The cow's dead. It follows you. The rope is the mathematics. It ties the lagging indicator to you. You will turn. The cow will follow in its own weighted due course as a result of the price data. The cow's inflections will be subject to your 4x4 pulling it in the mud, not to anything it does of its own accord. It's a dead cow. It doesn't talk, doesn't move. It's a corpse. The driver, the engine, the Ford F-150, you, the man steering it, that determines where the cow goes in the long end. Although it might skate and skid around behind you, a little left, a little right, at the end of the day, it's entirely a function of the mathematics, which is a moving average. It's just mathematics, the tow rope, and the engine and the vehicle itself. So be wary, despite being correct. Be wary of people that base their decisions off indicators. Till next time, I salute you and thank you for watching and following. Patterns are the way, volume lead, and we will see. It looks like candlestick analysis on the bigger time frame, which I was probably remiss in not doing. So I want to correct where I'm incorrect and give plaudits to those that were correct. It's a soft period. It's going to go lower. Sol's going to trade lower. Sorry, it's going to happen. XRP probably trade lower. XLM probably trade lower. Bitcoin probably trade lower. And in actual fact, during that corrective phase, you can expect Bitcoin dominance to escalate, but it's my overall view that it's probably turned. It depends how severe this is. If it's a grinding slow recession, it will grind out lower, and then eventually some pumpermentals or something comes in, then you could have the turn. If we have something really violent, major resets, whole scaboodle, war, whatever the case may be, massive drama, you could even have a spill, a nasty spill. And if you have the NASDAQ doing a major correction as part of that, you could see crypto be undesirable as a hold for a spell. So be careful. The dominance on tether is climbing, and it is a defensive measure. We want to see that 4% on the tether dominance back over here fall. There is some structure here. We'll see. We'll see what happens. If we get up here, you'll then maybe face, are we going to top out and come back down and then maybe break the downside? Time will tell. We'll be updating our community. You too can be part of that. Click a link below, book, and grab the free mini series anyway. In the meantime, doesn't cost you anything. We never send spam. We don't sell our lists. You will only get the videos that we send you over a 5 or 6 week period, one a week. And you will get the learnings that go hand in hand with it. Till next time, I talk to you later. Thank you for watching. Bye.